Hi friends, welcome back. So headline, Fed prepares to lower rates with size of first cut in doubt. And essentially the Fed could have four options. One could be raise rates, another could be hold rates, but those seem to be off the table these days. So now we're down to cut rates, and is it going to be two options there, a big cut or small cut? And the bet at the moment is actually bigger cut. I'll show you guys this. Again, they're going to announce tomorrow. They're meeting today and tomorrow. The markets are betting a 63% chance of a bigger cut. Bigger cut meaning 50 basis points, or another way to say is half a percent. And personally, my opinion on this stuff, yesterday it was just 50-50 chance of a bigger cut. Now we're at 63% chance. And my, date myself here, I'm thinking insane in the membrane. That's just like the song's been stuck in my head. And if you know the song, insane in the membrane, insane in the brain. Why do I say insane in the membrane? Because it's like, guys, we're not even really historically speaking that high of rates, and like Wall Street's just really clamoring for rate cuts. Now it depends what your experiences are. In my example, I grew up with this stuff. What, Cypress Hill, I think is what it is. And I remember a time when this would be kind of normal, 5% interest rate. It's not that crazy. Or you could take a look at mortgages. Or I think the average is like 6.5%, something like that. Yes, I understand. It's not 2%, it's not 0%, but it's not like ludicrously high. Yet we're talking about cutting, and so this is what the situation is like, okay, when the Fed announces, like, why are you cutting? Historically speaking, we're not that high. That's what we're watching, is what's the explanation going to be. Now if you ask CNBC, they're going to say, and they ask all their buddies, what do you think is going to cut going to be, 25 or 50 basis points? So the CNBC survey says, hey, we're going to get soft landing, right? No recession, we're going to be all great, and we're doing 25 basis points. That's what their bet is. Federal Jerome Powell, he'll have to come out and say, hey everyone, things are okay, we're not all going to lose our jobs, and we're all going to continue shopping. This is all about shopping. And if you don't understand the basically the American economy, and you can argue the modern world economy or capitalism is just about consumers buying stuff, companies selling people stuff, and consumers buying it. And why do you track the Fed rate? Why do you track the cost to borrow money? As companies borrow money to invest in products, to market things to you, to manufacture things, and then consumers borrow money to buy said things. That's just how our system works. And essentially, if the Fed comes out and says, hey guys, we have to really cut rates big, it may signal, depending how they report it, it may signal they think that there is weakness in the economy. So that's why we're watching all of these things. If you're curious what stocks could possibly do after the first rate cut, this is an interesting chart. Now, I've showed you several of these kind of charts from time to time. This is only looking at, modern era. So you have 89, 95, 98, right? So these, in those times, markets went up after the first rate cut. But if you want to go to 2001 or 2007, markets went down. The average is about 4%. So, considering the historically speaking, where are we now? Well, we're kind of actually at the top of the market. You just literally look at the chart, you can see S&P has been up big. You can take a look at our big bubble stock with something like Nvidia. I call it a bubble. I understand the young kids who have not seen this stuff before. They say, no, this is the beginning of Nvidia. And I'm just like, okay, show me the money. That's my opinion on that stuff. Show me the money. Are these companies really making money on AI or not? And so then what you do is you think about, okay, what's the Fed saying? And then what are individual companies saying? And then put all this stuff together and you got yourself a market. One of the things that I thought was interesting, and I want to relate it to this, is if you guys have been following this story, Tua, he's an NFL quarterback. I think he's got like his fourth concussion now. So, for me, my personal opinion, and why I bring it up to you, it'll make sense in a minute here, but in my opinion, it's not worth it. It's not worth risking your body. Again, you had four concussions, and like, how much more can your body take? Take the money and run. Now, if you stay in the game, you're going to theoretically make more money. But if you stay in the game and say you get a fifth concussion, get hurt, perhaps you could lose everything, right? You could lose all your health, maybe never walk again. Who knows, right? I'm relating this to the market. It's the same kind of thing. Let's say I have all my money and I YOLO'd in Nvidia and I'm up like 1,000% or 2,000%. It's actually been some crazy number in the last couple of years. And the question I pose to you, the same way with the quarterback thing, hey, you can actually take the money now out of Nvidia, cash out, right? Essentially take your money, or you could leave your money and risk it and perhaps lose more. I won't say you're not going to lose everything with Nvidia. It's not quite the same one to one. But in some things it could be. it's essentially a one-to-one. So for example, what I mean by that, I'm comparing the risks, something like this Trump crypto thing. So if you don't know, the Trump family introduced this new crypto project yesterday. I know we've kind of been overshadowed by the golf course, assassination attempt thing. And I mean, this is how crazy our news is. And then like the very next day, now he's introducing a crypto. This is real. And I guess they got this whole coin. They're calling it was like World Liberty Finance, I think is what it is. It's a stupid name. And this is how insane, and that's why, as I said, that song stuck in my head and stayed in the memory. But this is how insane our markets are. Is we we're talking about a presidential candidate who's like got this new crypto company. What, like 49 days before the election, something like that. That if you want to buy into this token thing, it's WLFI. I don't work for these people. I'm just reporting because I just think it's so crazy that this is barely even a story. For any other candidate or any other politician, this would be like a massive scandal. Like, hey, you're doing a big crypto scam right before the election, but that's what they're doing. And I'm relating this to the similar to the Fed, is when money is cheap and when it's easy to borrow and I can borrow money to set up whatever company, and then people can borrow money to buy in whatever company, and we're expecting everyone else to borrow money and jump into this thing. Then it's like you get these kind of bubbles. Essentially, is what it is. I think they're trying to compete with Coinbase or something. And this is the structure of this stuff. I'll read it to you guys. It says the equity structure for these tokens will be 20% of the project's tokens are allocated to the founding team, which includes the Trumps. 70% of the tokens are set aside for user rewards, and 60% of the coins will be available for the public to purchase. That's according to Zach Folkman. Now, it's interesting. I actually looked up the Zach dude. It's got to be him. So that's what he looks like. This is an older picture, but like he has on his Facebook, like back in 2019, 100 to million mastermind experience. So basically, he sells you get rich quick schemes. You can't make this stuff up. And it was just the other day, if you guys follow my channel, we were talking about Chase Hero. That's the guy on the left. Zach's the guy on the right. Chase Hero. He referred to himself as the dirtbag of the internet. These are the two guys that the Trumps are partnering with their crypto project. Like I said, you can't make this stuff up. This is a quote from the thing, and it's interesting to go over this stuff because it's like, again, for me, this sort of crazy tulip craze, this represents the market that we're in, and yet we're talking about, cutting rates to make money even more easy to borrow. Like, we already have this stuff. Like, how more crazy do we want to get? But who knows? Maybe this is our new normal. Let me read a little bit of it, and I would like to hear you guys' thoughts on this. So this says here, my son introduced me to two partners, Chase Hero and Zach Folkman, who are exceptionally bright people. And again, these are crypto pumpers, and both these people have been known to sell get-rich-quick schemes in the past. So not surprising if they're going to do it again, right? That's who they are. These guys are smart as currency traders, as I've met, and they began talking to me about decentralized finance, which means frictionless finance, and why it made sense for people about the forgotten who can't get credit out there. And this is coming from like one of Trump partners. And he says here, as I began to understand that, I said, quote, who would understand this better than the Trump family, right? About giving people credit or selling people crypto. I mean, who would understand that better than the Trumps? And we finally had a meeting with Eric, Don Jr., and the president and his council. And we said, let's pursue it. We've been on it for close to 9 months. So yes, it is a real thing, and this is not even headline news. It's just kind of a sub story, but I'm covering it because I think it's important for you guys to understand like how wacky our markets are, and yet we want to cut rates to make money even more easy to get into these kind of projects. And that's why I bring up the quarterback thing. Is in your situation, do you want to risk it and try to get for more money, right? Go for more millions of your in your NFL contract, but you could get hurt. Another thing that's going on here. And again, this is the stuff that you track when you want to understand the market, is like, are companies successful in pitching their stuff, and will the customer show up? Snapchat, they're saying, hey, we got these new AR goggle thingies. They're going to be awesome. And I guess they want to charge developers $100 a month. So it's going to be like $1,200. And what's interesting about this is like Meta's got goggles too, but they're dumping millions into their thing. I'm talking about, Facebook Meta. But they're not profitable on theirs. The difference with Meta compared to Snap is Meta's got a stable revenue of millions coming in or actually billions really, for their ad revenue, but Snap is kind of like questionable if they make money or not, and yet they're introducing new products. I think until we drain the money out of the system, you're still going to have this crazy crypto projects. You're going to have these crazy things like Snap companies. And guys, I'll be curious if any of you use Snap. I think this is for a younger audience, so I know what it is. I've seen the app, but I don't mess with it. And then you have money going into, essentially, this is the Winklevoss twins, so those are the ones that were involved with the Meta early on. I'm sure you guys know who these people are. But they've been giving a bunch of money to politicians. I'm not sure how much money they gave to the, like if it, because I know, when you give money to politicians, it could be split either Republican or Democrat. It is disclosed every now and for example, if the FTX situation, they gave money to both parties. I wouldn't be shocked if these people do also. But I guess in 2024, they've given 190 million to keep the party going, and that is crypto. So for me, guys, when I see that we still have this bubble stuff around, etc., I'm just like, okay, so why are we talking about cutting? Like, is it really necessary? And then going back to, it all depends what the Fed says. They're going to say, hey, the economy's scary and we're just worried that everyone's going to lose their jobs, so therefore we want to get things rolling again. But I feel like things are still rolling. What else could happen? So this is an interesting one. This is different asset classes after the first cut. And depending on what year you want to look at. So, and like say, for example, in 2019, gold did really, really well, right? You can see right there. Or say, look at this. Say in 2007, it looks like bonds, or even 2019, bonds were attractive, but 98, 95, they weren't so much. Essentially, what you're thinking about, right, when you're managing your money is, where's my money best going to be? Are we in a risk on era or risk off era? Like, again, I keep saying the same thing over and over again. For me, I just feel like we're in bubble, land still, and will this bubble ever end? Will these sort of Trump family crypto stuff be over? So that's sort of why I'm watching. I want to mention this one thing too, and then we have this crazy international news. I've read a couple things about this stuff, and honestly, I don't know what to make of it. Basically, and why do you track this stuff? You just want to know about stability around the world, and are people, you know, essentially willing to bet on the world economy doing great and we're still going to be shopping or not shopping, or we're going to be like a little bit worried about trade and worried about oil, flows, that kind of thing. But evidently, I guess Hezbollah, they like all these different people had pagers, and they're claiming that Israel had a way to like blow up their pagers somehow. So I read through it and I was like, I honestly don't know how that even works. I don't even know if anyone's going to tell you how that even works. If you guys know, you can tell me. But I guess that's sort of the same question of asking, like, why should I invest in crypto? Who knows? Anyway, I just wanted to share some thoughts on the markets and sort of what I'm thinking. I want to hear your thoughts. What do you think? The Fed's could do 25 cut or a 50 basis point cut? That's the bet. The bet is on the 50, which is bigger. And the question for you is, do you want to be risk on or risk off? So I shared my thoughts. I want to hear yours. Thanks for watching, and I'll catch you next time.